Hey everyone, welcome to Alpha Insights. I'm Joe, and we're here with a fresh take on what's been roiling the cannabis space. And hey, if you've got a question while you're listening, drop it at stockalpha.ai.
And I'm Allison. Great to be here. Quick note up front. U.S. markets are closed today, so we'll frame everything heading into the long weekend and reference market moves as of Friday, June 12th.
Right, so the big story is a coordinated push from the drug testing industry to block or slow any federal rescheduling of cannabis. That's a pretty big deal because rescheduling was one of the main policy catalysts people expected to ease banking, taxes, and research restrictions.
Exactly. And what's interesting is how targeted this lobbying looks. Groups tied to workplace and forensic testing are saying rescheduling could complicate employment drug policies. So now agencies and lawmakers have another political calculation on their hands.
Which basically means a timeline that had seemed achievable might stretch out. Analysts note that increased regulatory uncertainty tends to compress near-term upside for firms that were banking on clearer rules.
Yeah, that's a good point. And state politics aren't making this any easier. We saw friction in places like Kentucky and Pennsylvania, public spats between governors and state legislators, and in Pennsylvania, a cannabis bill actually failed.
Those state-level knockbacks matter because investors have been counting on a patchwork of incremental wins to build momentum. When local politics flip the script, it raises headline risk for operators with exposure across multiple states.
Right. And Massachusetts had this other wrinkle where an anti-marijuana petitioner got removed from a ballot effort. So progress is very uneven from state to state.
So let's unpack why this matters for the businesses themselves. If rescheduling gets delayed, companies keep operating under federal constraints, limited access to banking, restrictions on interstate commerce, and barriers to federally funded research.
And that means continued complexity in taxes and finance. Companies are effectively running businesses that look legal at the state level, but still bump into federal rules. Analysts say that can translate into higher operating costs and slower growth than some models assumed.
Which brings us to another point. Expect more lobbying from both sides. Drug testing groups, state-level opponents, pro-reform coalitions, all of them are going to try to shape public opinion and agency decisions. It's going to be noisy.
Noisy is the right word. So, what should listeners actually watch this week and heading into next week? First, federal signals. Keep an eye on anything from the Department of Health and Human Services and the Drug Enforcement Administration for procedural moves on rescheduling.
And follow congressional activity. If a bill or hearing gets bipartisan traction, that can change the picture more quickly than administrative processes. Will key committees schedule hearings? That's the kind of thing that can reset expectations.
State calendars matter too. Track votes in places where reform is active. Pennsylvania and Kentucky are obvious ones right now, because local setbacks can stall sentiment broadly, especially for multi-state operators.
Also watch legal filings and lobbying disclosures from testing and employer groups. Those filings can force agencies to slow roll decisions or open formal comment periods, which pushes timelines out.
And for people watching market action, monitor trading volume as well as price. Headline-driven moves in this sector can be fast and short-lived, analysts note. So volume tells you whether a move has conviction.
Just to be clear, we're not giving investment advice here. We're pointing out that political pushback is the dominant near-term risk, and that geographic exposure is important when you think about companies in this space.
Short reactions. Quick ones. This is going to be headline-driven. Expect more lobbying. And state politics will keep things messy.
All good short takes. Bottom line, delays in rescheduling mean federal constraints stay in place longer, and that keeps risk elevated for cannabis ETFs and major US names like Trulieve, Green Thumb, Curaleaf, and Tilray.
Exactly. So key watch points. Federal agency statements, any congressional hearings, state legislative calendars, and filings from industry groups. Those are the things that can move the narrative quickly.
All right, let's wrap. Quick summary together.
Political and industry pushback is creating fresh headwinds.
State-level fights mean progress will be uneven and headline risk stays high.
And watch federal agencies, Congress, state votes, and lobbying filings for the next big cues.
Got questions? We'd love to hear them. Head over to stockalpha.ai where you can ask us anything and we'll answer live. And while you're there, check out more market content.
Thanks for listening. I'm Allison.
And I'm Joe. See you next time on Alpha Insights.